Hey traders and investors, it's Serge Berger here. Today we're going to talk about the Blizzard trade. Or actually, I'm just kind of kidding. It's not really the Blizzard trade, but it's something that I've been looking at and we're discussing every day now on the Steady Trade Alert Analysis Service that's increasingly looking to be of concern to the broader market. Last week, of course, we talked about the financial stocks, particularly the large ones, JP Morgan, Citigroup, those kind of names that have showed a lot of relative and an absolute weakness in terms of versus the broader market. And the transportation stocks, as of last week, are looking a lot worse as well. They have been, of course, um, uh, some of the big ones have showed some weakness, and last week we had a lot more of them joining that weakness. So if you look at the IYT, by the way, you don't quite see this yet. If I could type this in right, IYT, this is the transportation ETF that I like to follow. Haven't seen that just yet in here, but we are increasingly seeing it in single name stocks. So, for example, let me give you a couple of names. First of all, Canadian Pacific. I keep typing in this wrong symbol for this one. Canadian Pacific CP is the ticker symbol here. You can see this stock here through a sort of a longer term lens. What it actually did last year, it overshot the long term sort of upwards trend that it had. So it's now mean reverted back in here, and it increasingly looks like this is now ready to start actually even breaking below this trend at least for a little bit. So here's one. You can look at this one a little bit closer up and see that this stock has actually given us a very nice bearish reversal through a purely technical lens last week after earnings. It bumped. You see the spike here. This is what you call a bearish reversal. It's actually called a shooting star type of candle. And without getting too specific, it basically made another lower high, bumped it in the 50-day moving average, and we're now increasingly dancing on this thinning line of support. So a move below, a drop here into the 160s or so is entirely possible. Maybe even below that. And then you look at something like KSU, which is Kansas City Southern, also a railroad company. Last week, of course, had earnings. The stock continues to look very concerningly weak here. We broke that uptrend line a while ago. We've now looks like we've formed a double top that's now being confirmed with last week's weakness. So you can look at you can see a lot of things more clearly if you look at charts, not just from a purely chartist perspective, but also considering what the broader market looks like. And if you recall, I've been talking about this increased volatility in commodities, currencies, and then of course, increased trading ranges in the S&P, a late cyclical environment, a lot of stuff happening here. Rate of change in economics on the economic front slowing down. So if you look at all that stuff, and then you start seeing things like this happening in the transportation stocks, you really start getting an increasingly a higher probability trade to the downside on these kind of names. So I hope this makes sense, guys. As always, if you got any questions, you can hit up over to the steadytrader.com and sign up for the trade alert service if you're interested. Otherwise, hit me up on Twitter. My Twitter handle is steadytrader, and I'll see you in the next video.